In this presentation, we will take a look at car and truck expenses as they relate to a Schedule C business for a sole proprietorship. We're focusing here on the top line of our income tax equation, the income tax line, remembering that that is supported by a Schedule C, which has income and expenses. We're focusing here on a possible expense related to the car and truck, and that then would flow through to the first page of the 1040. The first page of the 1040, we're concentrating in on 7A. That would then be supported by the Schedule 1, line 3, which would then be supported by the Schedule C. Car and truck expenses. If you use your car or truck in your business, you may be able to deduct the cost of operating and maintaining your vehicle. You also may be able to deduct other costs of local transportation and traveling away from home overnight on business. Car and truck expenses. Local transportation expenses. Local transportation expenses include the ordinary and necessary costs of the following: getting from one workplace to another in the course of your business or profession when you are traveling within the city or general area that is your tax home. Tax home is defined later. Visit clients or customers. Going to a business meeting away from your regular workplace, and getting from your home to a temporary workplace when you have one or more regular places of work. These temporary workplaces can be either within the area of your tax home or outside that area. So in other words, we're thinking about taking a car and truck expenses. If we're talking about travel and we're talking about the local transportation of travel, you'll note what's not included here. We're not including basically a normal commute. So even if we have a Schedule C type of business, we may have basically kind of a normal office that we go to in the local commute. That typically is not included in the expenses for a car and truck expense, because the thought is that no matter where you work, you're still going to have that kind of local commute. So you'll note that the local commute is not here. Pretty much everything else that you would consider would be as part of the Schedule C. We're thinking about Schedule C type of business expenses that's related to the business, you would think would be included. So getting from one workplace to another in the course of your business. So if you're already at one workplace and you're going to another workplace, then you would think that the mileage there is business related and therefore deductible, not simply a commute. Visiting clients or customers. Obviously, if you're taking your car and going to a client, you're not taking a normal commute there. You're not just going to a normal commute. Even if you're going from your home to the client, you're going to something other than a normal kind of commute, and therefore that would typically be something that is possibly deductible under the car and truck expenses. Going to a business meeting away from your regular workplace. So if you're going to a business meeting and it's in your normal workplace, then that would still, be like a commute, normal commute that for a workplace, but if it's somewhere else, then it would be outside. Getting from your home to a temporary workplace when you have one or more regular places of work. So this is where it gets a little bit more confusing. What if you have a couple different places that are kind of you go to a lot? Then you have a question of, well, we're going to have to label one if the commute isn't qualified. We have to label one as basically the primary workplace and the other one as the secondary workplace, and possibly then the drive to the secondary workplace, possibly you would have the deduction for, whereas the primary workplace, then you would possibly not, because it would be basically a commute. Local business transportation does not include expenses you have while traveling away from home overnight. So we're not including the overnight expenses here in the local business area. You have to look at a different section for them. Those expenses are deductible as travel expenses and are discussed later under the travel and meals. So if it's an overnight type of thing, then, and you're questioning about the deductibility of it, you don't want to look at the local business, you want to look at the travel information. So it still may be deductible, but not in this section that we're discussing here. However, if you use your car while traveling away from home overnight, use the rules in this section to figure your car expense deduction. So the car expense, we'll talk the different ways that you can calculate the car expense. Generally, your tax home is your regular place of business, regardless of where you maintain your family home. It includes the entire city or general area in which your business or work is located. So we need to find out what your tax home is, basically, with regards to your place of business here. So we got to kind of label that. Office in the home. Your workplace can be your home office if you have an office in your home that qualifies as a principal place of business. For more information, see business use of your home later. So if you have the home office, then that may be your principal place of business. And therefore, if it were, you would think just about everywhere else you go, if you go to visit a client or some other place, it would be not your principal place of business, and therefore it would qualify possibly as a travel expense, the local business transportation type of expense. However, if you work from home and you have another office that you do a lot of work in, then you got to determine which is going to be basically your primary office. Methods of deducting. So we then have the standard mileage method and we have the actual expense method. So the standard mileage method is meant to be kind of a shortcut and easier type of method where we're basically going to be applying a rate, or you can use the actual method. Now this can be a little bit confusing because when you're recording the books, your actual bookkeeping for the expenses related to a vehicle that you may be using for business, then you will typically be using, of course, the actual expenses method as you record that. However, on the tax return, it may be beneficial to use the standard mileage method. So just realize that when you go to the tax preparation and you're talking about transportation and autos related to the business, that you may have to do some figuring out of what's going on there. You may have the expenses on an actual basis, and you may have to think about certain aspects of it, such as, is the car used entirely for work or is it partly personal, and whether or not you want to use the actual expense method or the standard mileage method. The standard mileage method can come out to be more beneficial sometimes, and you may not need as, if you use the actual expenses method, then you want to make sure you have all the supporting documentation. You want either method, you need supporting documentation, but you may need less for the standard mileage method. It might be easier to process. So let's start with the standard mileage method. Choosing the standard mileage rate. If you want to use the standard mileage rate for a car or truck you own, you must choose to use it in the first year the car is available for use in your business. In later years, you can choose to use either the standard mileage rate or the actual expenses. If you use the standard mileage rate for a car you lease, you must choose it for the entire lease period, including the renewals. So they don't want you particularly with the lease agreement. With both methods, you typically want consistency within the method. But for sure, within the lease method, if you were to take the standard mileage method, then they want you to use the standard mileage measure through the entire time period that the lease is taking place. But the general rule here, like many different type of methods that would be used, is they're going to want consistency with this. Also note that the tax software can help with the information when you're kind of choosing between the standard or actual. You can put the information for both, and the tax software can help make some determinations as to which would be most beneficial. Standard mileage rate not allowed. You cannot use the standard mileage rate if you operate 5 or more cars at the same time. So if you got 5 or more cars, then you're not using the standard mileage rate. You'll have to use the actual. Claimed a depreciation deduction using any method other than straight line. For example, acres or makers, which are kind of like the standard depreciation methods that would typically be used for tax purposes usually, and that's kind of an accelerated method. Claimed a Section 179 deduction on the car, which again is kind of related to depreciation, and the point is that you're taking the standard mileage method rather than the actual method, which may include depreciation, which is allocating the cost of the car over as an expense basically. Claimed the special depreciation allowance on the car, which again is another form of depreciation. Claimed an actual car expense for a car you leased, or are a rural mail carrier who received a qualified reimbursement. So if you got reimbursed for it, then typically you can't usually get a deduction for something if you got reimbursed for it. So standard mileage rate, parking fees and tolls. In addition to using the standard mileage rate, you can deduct any business related parking fees and tolls. So you can include, even though those are kind of like actual type of items, although you're using the standard mileage rate, which is just going to take a rate times the miles, you can include some of the actual items, which include the parking fees and the tolls. Parking fees you pay to park your car at your place of work are non-deductible commuting expenses. So if it's part of the work, your commute basically thing, they include that in the commute. And remember, the commute is not something that would typically be included. Actual expenses. So now we're thinking about the other type of way we can do this, which is actual expenses rather than the standard mileage rate. If you do not choose to use the standard mileage rate, you may be able to deduct your actual car or truck expenses. Actual car expenses include the cost of the following items. So we could have depreciation, and note all the exceptions we saw before between using the standard rate. A lot of them were depreciation, and that's one of the things that makes the standard method a lot easier, because depreciation gets a bit complicated, especially with an automobile, which has restrictions on the depreciation. So the cost of the car being allocated over the life of use is one of the major things that could be an expense using the actual method, and one of the things that are kind of simplified using the other method. Everything else you have to basically add up as well that would be related to the car, and you got to make sure that you're taking into account the portion of the car that's going to be used. You want to make sure it's the business use of the car, not the personal use of the car. So in any case, we got the depreciation. We've got the garage rent, gas, insurance, lease payments, licenses, oil, parking fees, registration, repairs, tires, tolls. These are all things that would typically be included, or we'd have to add up if we're using the actual expenses method for the car or truck for the business use on the Schedule C. If you use your vehicle for both business and personal purposes, you must divide your expenses between business and personal. You can divide your expenses based on the miles driven for each purpose. So if you have a car that you're kind of splitting, you're using it for business and personal, then no matter what method you're going to use, you've got to split it up in some way, so that you're taking the expense only related to the business portion of the use of the auto.